Hello everyone, my name is Shikha Malhotra and I am from the Department of Commerce and I'll be taking the subject money and banking. So today we'll be discussing about the concept of money. Whenever the word money comes in our mind, the first thing we think about is what we'll be purchasing with the money, how can I earn more money, where should I be investing the money. But have we ever thought about how actually money came into the picture? How money evolved, what exactly money is. So today I'll be trying to answer all these questions. I'll be trying to make you understand what exactly money is and how the money evolved. So let's first go through the definition of money. There have been various definitions given by a lot of economists on the topic money, but each and every definition had few of the lackings. But the definition given by Professor Crowther is considered to be one of the best definitions because it covers all the aspects of money. So let's just go through the definition first. The definition of money by Professor Crowther defines that money is anything that is generally acceptable as a means of exchange and at the same time acts as a measure and a store of value. So this definition by Professor Crowther has given us a lot of new terminologies to understand. So the first thing is general acceptability of the money. The second point is means of exchange. The third point is it acts as a measure of value. And the fourth point we'll be discussing is money acts as a store of value. So let's just first try to understand the terminology general acceptability. So when I'm talking about the word general acceptability, I mean to say one of the biggest quality of the money is that it should has general acceptance. Good money should be accepted by all without any kind of hesitation. Since the law declares the money, therefore it is a legal tender. By legal tender, I mean to say it has an inherent quality of general acceptability, that each and every person residing in that particular country has to accept the particular currency. Like for example, we have rupees in India. Each and every one who is residing in India would be doing the transaction through the money which is rupees. The next point is medium of exchange. So in the earlier times, there were no currency as such. The entire exchange was done through the barter system. So there were a lot of difficulties while doing the barter system. A handful of grain for one person valued different from the handful of grains value for the other person. Therefore, to remove the inconveniences of the barter, money came into picture. Money acts as a medium of payment for doing any kind of buying and selling activities. The third point is money acts as a measure of value. So money is a sort of common denominator which helps in fixing the values of all the goods and services which are available or produced in an economy. For example, if we want to purchase oil, we'll be purchasing the oil in liters. If we want to purchase sugar, we'll be purchasing the sugar in kgs. But then these liters and kgs are fixed with some kind of amount, and that is defined by the rupees, that is the money which is the common denominator. So without a common unit, it would become really very difficult to exchange the product and services. So now, because of the concept of money, it has become really easy to determine the value of all the goods and services, and that can be easily expressed in one single unit, and that is money. Now, the point number 4, which is store of value. Money acts as a store of value. Money can be stored for future use. As I've already said, in earlier times, there were no currency in picture. So, these people would actually store grains or food items to be used in future. But every item has a restricted shelf life and it will rot after a certain point in time. But because of the advent of money coming in the picture, we can now store wealth in the form of money. Money gives us the purchasing power, and at any point in time we would want to purchase anything, we'll just have to step out of our houses and purchase the required item. So therefore, Professor Crowther has very well defined money as store of value, as a measure of value, as a medium of exchange, and has general acceptability. I hope you must have understood the concept of money and what exactly money is. Now let's move on to the other part, that is the evolution of money. So how money actually came into picture. Was money there from the first day we were born? No, it wasn't. Earlier, the entire transaction started with the barter system. So barter system is what? Barter system is nothing but the exchange of one product with that of the other. A person who has more of one product might exchange it with the other product. Like for example, a person wants to purchase milk and they have wheat with them. So the milk can be exchanged with the quantity of wheat. But there would be a lot of chaos and problems and questions. How much wheat can be purchased or how much milk can be purchased with that amount of wheat? So it would bring in a lot of problems and questions. Therefore, the barter system was slowly and steadily abolished, and then came the gold system. While purchasing a product, one has to exchange the gold and silver coins to get the product. But then that was also really difficult because everybody could not afford the gold and silver coins. So it was overall reducing the purchasing power of the people. So there had to be some other solution for this. So later on, metal coins came into picture. These metal coins, which we have currently right now in our economy running, are made of metals which are not very precious in nature, and everybody can afford these metals. So the government of India is the one which mints these metal coins, and they are circulated all over the economy. Then came the paper money in the picture. The paper money is issued by the Reserve Bank of India or the Central Bank of any country along with the government of that country, which we use day in, day out. Now, the next thing came up is the plastic cards. So earlier, we used to carry a big wallet with lot of money in it, but now, which they have been easily replaced with these plastic cards. Plastic cards are the debit cards and the credit cards, which can be easily swiped for any kind of purchasing you would want. So this has reduced actually the burden on the wallet also. And after the plastic cards came the electronic money. So when we had paper money in use, we were carrying heavy wallets with the money in it. Later on, they were replaced with the credit cards or the debit cards, and now sometimes we altogether forget to take our wallets along with us because we have these mobile phones which offer us easy UPI payments, net banking options, lot of apps which help us in transferring the money electronically. And the latest one in the lot is the cryptocurrency. So you'll be now able to see a lot of young generation investing in the cryptocurrency and making money out of it. But still, cryptocurrency is not used worldwide and is not 100% legal as of now. But the major form of money which is being used day in, day out by every individual is the electronic money. I hope the concept of money and the evolution of money is clear. We'll be meeting next time with some new and more interesting topics. Thank you.